General risk warning. The financial services provided by this video carry a high level of risk and can result in the loss of all your funds. You should never invest money that you cannot afford to lose. Introducing candlestick charts. Once you start to trade forex instruments, you will notice that professional traders and brokers use a number of diagrams, analysis tools, graphs and stock charts to highlight projections and patterns in day trading. One such tool that is commonly used is a candlestick chart. It is important to understand how to read candlestick charts and what the different components of a candle are. If you want to learn how to apply candlestick chart analysis to your trading strategy, this video covers all the basics to help you get there. Candlestick charts are particularly popular in day trading for two reasons. They offer a wide range of trading information and their design makes them easy to read and interpret. Bar charts and line charts are two other popular indicators for price analysis in forex trading, but candlestick charts have become more popular over time. Candlestick charts offer an enjoyable visual perception of price, which is a distinct advantage over bar charts. Bar charts are not as visual as candle charts, and the candle formations or price patterns are not as easy to distinguish as they are in candlestick charts. There are several ways to use and read a candlestick chart. The analysis of a candlestick chart can be fine-tuned based on your preferred trading strategy and time frame. Some forex traders might focus on taking advantage of candle formations, while others attempt to spot price patterns. Learning how to understand a candlestick chart's meaning is simple, as there are only 4 data points displayed. These points are open, close, high, and low. They make up the candlestick chart and indicate the open, highest, lowest, and close prices for the time frame the trader has chosen. When you read a candlestick chart, you can determine if a session is bullish or bearish based on the opening and closing prices of the candlesticks. When the closing price is higher than the opening price, it is called a bullish candlestick. If the closing price is lower than the opening price, it is known as a bearish candlestick. The upper and lower shadows of the candlestick mark the highest and lowest price during the chosen time period. 1 minute, 60 minutes, 1 day, etc. Candlestick charts are a useful tool to better understand the price action and order flow in the forex market. However, before you can read and explain a candlestick chart, you must understand what it is and become comfortable identifying and using candlesticks patterns. Please like and subscribe to my channel, and click the bell icon to get video updates.